Hey everybody, Economic Ninja here. I hope you're doing great. Let's talk about the jobs report that came out today. And I don't know if this is coming out on the same day or if it's coming out the next day, but I think this is a very interesting story. It's entitled, What Was Behind Today's Wow, Wow, Wow Jobs Report? It says there was a loud gasp from Wall Street strategists, economists, after today's job report printed, with the reactions more or less in line with sheer shock anywhere from wow, wow, wow. And this came out from a tweet, literally said, wow, wow. CNBC anchor stunned by the jobs report, showing 517,000 jobs added, literally a blast off of a number. Now it says right here, another tweet that came out, holy moly, what a report. Sensational distortions and benchmarking aside, people who want jobs can find them. And while the labor share of GDP isn't rising, there is something extraordinary and good going on in the distribution of wage growth. Now, we're going to explain why this is such a big deal when it comes to the Federal Reserve, the whole pivoting and raising rates, okay? Because you guys know they raised rates, what, 25 basis points the other day? No big deal, right? And everyone's cheering that they're getting close to stopping and then dropping. I'm telling you, I've been saying this for months. Do not put that narrative in your pocket and hold on to that. I think that is a completely false narrative. And I think that you're going to see rates have to rise even higher because remember, certain parts of inflation is still here. Food and energy, right? There's other deflationary events happening. So they slowed, but they're going to have to pick back up again eventually because as food and stuff, the consumer needs its back broken. Honestly, that's literally what it comes down to. It's not a good thing, but if you know it's coming ahead of time, you can prepare for this. It says right here, and with the unemployment rate plunging to 3.4%, matching the lowest in 54 years. Tell me if you think that's the truth, because I don't believe it at all right? I don't. I think it's rhetoric, and I think it's literally the cup game, you know, the dice in the cup or whatever. They're just moving things around, changing narratives, changing definitions, changing the way that the metrics are added up, okay? All right, so I don't believe that. But it's the lowest in 54 years from 3.6%, while the payrolls report showing the addition of 517,000 jobs, the highest since July, and far above the highest forecast. In fact, a record 9 sigma beat to median consensus. The shock was merited as today's report was indeed a blowout. But why? What happened with that everyone is so wrong? A couple of things. First, as we warned yesterday, today the BLS unveiled a new slew of data revisions. This is where they get you. I've told you this before. It's always in the revisions, which would have the mechanical effect of boosting the labor force and updating seasonal factors, which further distorted the January non-farm payroll number. This is key as readers read shortly. I'm going to link this story below because I think it's so darn important that you read through it and look at these charts. But check this out. In practical terms, it says, whether they were merited or purely goal-seeked propaganda, the revisions helped to resolve the mystery of missing workers in the labor market. Fed Chair Jerome Powell and most analysts have estimated that between 2.5 to 3 million workers are missing, i.e., most analysts would expect many more workers to be working today if the pandemic hadn't happened. Well, there was an 813,000 upward revision to the December payrolls report, which was revised from 153 million and change to 154 million and change, which explained much of where the missing workers went. As expected, they were merely bits in some Excel spreadsheet. Guys, I think that the Fed is not going to pivot. I think that pretty soon you are going to see the Federal Reserve start raising even more than 25 basis points. Why? Because energy and food costs are still inflating. Employment is still rising. The Federal Reserve wants to see unemployment go much higher, not employment. Because if that keeps happening, people have more money, right? There's more people working than less people, and they keep spending money on goods and services, which keep that inflation rate going. So the Fed has to break the back of the consumer. That is literally how it works. It is literally that simple. So when a jobs report prints like that and it's super strong, it actually causes the Fed and Jerome Powell to cringe because he's like, man, we're going to have to raise rates higher. That means less real estate sales. That means higher borrowing costs for students and for everybody that has student credit card debt, right? They've got to raise it and push it higher to where you borrow less, which means you have less money in your pocket to either speculate or buy anything. And then what happens is those sales collapse. Then the Fed's done their job and brings down inflation. But like Jerome Powell said many, many months ago, there is going to be pain, and there are going to be things that we do that are not going to be considered, popular, if I had the proper term right. But you see my point. They're going to have to keep squeezing the economy. They're going to keep ratcheting it up, those interest rates, because they have to, because the back has not been broken yet, right? I mean, look at what's going on in auto sales. It blows you away that why are these companies still charging like, what is it, stupid amounts over MSRP? Why? Because inventory is low and there are still dumb people that'll go out and borrow. But that is slowing rapidly. The same thing with home sales, slowing rapidly. More and more people cannot afford the current price of homes because of the rate of interest. So now people are having to either, companies are having to make concessions, like home builders, and say, we'll buy down your points, which is easy. We could still sell you this overpriced house, but what we'll do is we'll put like $20,000, $30,000 into point buy downs so you have a lower mortgage rate. So now you can just get in. Or we have to ultimately, like Toll Brothers and Lennar are doing, lower the price of our homes. All right, so think about that. This is going to be an epic turn in this economy, but it happens slowly. It is a slow moving freight train, slowly nudging up against the semi truck that was stupid enough to stop on the tracks. The train will win, even though it is inching very slowly. And with that being said, the economic ninja is out.